And I'll go ahead and draw in a green box to make this a lot more clear. The area of price that the market is in right now between 1.3 even and 1.3057 is where I'm looking at for possible long trades. And yes, by the end of today, I probably won't place a trade. It's Friday, but come Monday, this is the area I'll be looking for possible price action patterns or candlestick patterns or whatever my entry reason is. I'll be looking for that down on lower time frames. And let me do a brief example of what I'm looking for just to give you the full scope of everything you need to start trading, testing, and possibly adding major levels of structure into your trading plan. So let's drop down to a 1 hour chart. This is something like I would look for come Monday when I'm planning to trade this. If this market comes down, creates a bottom, and then retests that bottom and gives me a green candle without breaking below this low over here, that shows me this is a double bottom. And if we get a green candle, that shows me buying pressure, which tells me we have a very high likelihood of this market heading higher, and I will be making a purchase on the pound dollar to buy if that happens. Hey guys, just wanted to give you some insight on that pound dollar trade we were just talking about. On Monday, we actually did get an entry reason. I'm finishing up the editing of this video here on Tuesday, and I want to show you guys what happened over the weekend and on Monday. Not really what happened over the weekend because the market's closed, but what happened on Monday. As you can see, last week we were in our zone. I'll drop down to that 1 hour chart. And here you can see this is about the place we were at last week when doing the video. If I push the market forward here, you can see that we came down, we got to push up. We're going to call that our first bottom, like we just talked about. And then we came down and we eventually got a green candle on a second bottom, showing me possible buying pressure that could push the market higher. With that being the case, I went ahead and made this buy trade. And if I hit play here, you can see that eventually this market pushed up and hit targets on this buy. But this is exactly what I'm talking about in terms of entry reason on these. I'm waiting for the market to get into these areas of major structure based on what you're learning in this video. Then I'm waiting on simple price action patterns like a double bottom with confirmation. Confirmation just being a green candle. And this is just a green doji, but any green candle is enough for me. I don't want to overcomplicate the rules of my trading. And with that being the case, we actually got a nice trade on this Monday that ended up hitting targets. Yes, it got close to our stop loss. We ended up getting filled, going through a little bit of pain and then pushing up, but it was nowhere near close enough to stop us out, hitting about 7 pips here away from our stop loss. Again, eventually hitting targets. That was just a great teaching moment for me to show you exactly what I'm looking for in terms of entries, but now we'll jump back into the video. What's up guys? Steven here, your honest trading coach. And if you are currently trading based around structure levels like support and resistance or price action of any kind, then there's a few mistakes that you are probably making right now. And that's okay. I've made a lot of mistakes in my trading career, which is one of the reasons I can bring you videos like this, because I want to help you fix them. So in today's video, I'm going to teach you how to spot major levels of structure that move the market correctly. And by the end of the video, you're going to know how to spot these levels better than you know how to make coffee in the morning. And if you don't drink coffee, then better than you know how to make tea. And if you don't drink coffee or tea, then what's wrong with you? Who are you? No, I'm totally joking, guys. Let's go ahead and dive into the content. You're totally fine if you don't drink tea or coffee. Let's learn how to master these structure levels starting on the euro dollar. So here on the chart of the euro dollar, we have a few major levels of structure that I'm going to show you guys, but I want to discuss how to spot these major levels first. And spotting major levels of structure comes down to two major parts. Those two major parts are recency and frequency. And a very, very common mistake I'm going to talk about quickly is that most traders do not pay attention to that first part. Most traders don't pay attention to recency, and because of that, I see this all the time. Let's say price is right where it is right now on our red candle, and traders will put a horizontal line on price and they'll scroll their chart back all the way to July and September of 2019, and they'll go back here and go, oh yeah, here's one. Here's a nice level. Look how many times this was tested as support and resistance. Well, if you're doing this, you're leaving out one of the most important parts of identifying major levels of structure, and that is recency. Yes, this was tested frequently, but if I were to ask you, based on where price is now, what is more recent? Based on where price is now, was this level tested more recently, or were these levels back here? based on a time factor. Well, of course you would say these levels, why are they tested more recently? Well, if we take out a ruler and go back and count the bars, this level was tested and reacted to 70 something bars ago. This level about 100 bars ago versus these levels back here, the closest was over 480 bars back. So don't leave out the recency part, because if you do, you'll end up scrolling back here and having 100 horizontal lines on your chart everywhere you see any level of structure that's been tested multiple times. And that is not what you want to do, because that can cause all kinds of confusion and lead to you trading in places that don't matter whatsoever. So let's get you to a point where you're trading in the structure levels, the major levels that matter. And in order to do that, what are we looking at? Frequency and recency. So recently, the euro dollar had a move that looked like this. We pushed up to a level of resistance that buyers, bulls could not take control and push above. And then bears took over so much that we not only had an impulsive move down as a pullback, but then we got a lower high here and a lower low here, creating what could start a possible downtrend. Now at this point in my mind, I'm going sell, sell, sell. And what is a recent level that was tested frequently after this move? This move here, if I'm looking at levels that are going to continue this possible downtrend, where do you think I would be looking? Well, just so you know, my first spot was about right here. And for obvious reasons. This level was tested very recently and was tested multiple times. We have both of the key elements of a major level of structure playing out right here. And we did get a little move down from here. And this does not look like much on a daily chart, but if you were placing a trade on an hourly chart, and we'll talk about multiple time frames in just a second, then this was about a 60 pip move. You could have possibly hit targets. But after that move happened, and we got past this level of structure, last week I was talking about the level in red you see between 1.1863 and 1.1934, and this was actually 2 weeks ago, the last time I did a video like this. I was talking about this level becoming resistance, and let's see what happened. We've recently got to this level, and now we've seen a nice push down from this level. Again, may not look like much on a daily chart, but on a 1 hour, maybe even a 4 hour time frame, this was likely enough to hit targets coming in at about 70 or 80 pips. And what I'm going to do today is go through the top 5 major pairs using this frequency and recency way of spotting major levels of structure for you, so you can get a better grasp on this concept, and also you can see what I'm looking at in terms of what I think the market's going to do over the next week. So here on the euro dollar, we've just popped into our zone of resistance. If this market continues to test this zone, then it's an area I will continue to look for possible sell trades out of. Now, if we start to push down, I will look for a significant bounce out of this area. If we start to push down from here, I think we will then be in a downtrend. For instance, if we get all the way down to this level of structure, I'm not expecting us to pop back up and make new highs on the euro dollar. If we get all the way down to this level of structure, I'm expecting it to break, but I think if we get to this level around 1.1625, that we will get a bounce out of this market from that level, and that bounce on lower time frames will be enough for me to hit targets. So as for major levels of structure, what are we looking for? Recency. We have recency right here. If we scroll the chart back frequency wise, we can do this on the second test, right? All I need to see for the recency part of this is that it was tested at least once recently. Okay, after that first test, I can scroll the chart back as far as I need to and make sure that I have at least one more test, which I do right here as resistance. I'll actually pull my line down a little, and this will be the next major level of support I'm looking for on the euro dollar. So if we push down, that's a level I'm looking at for possible long trades. It's between 1.1634 and 116 even on the euro dollar. If we continue down past that, I'll be looking at 1.1454 and 1.1376 as my next area of possible support if we do break through this more of a minor level of structure. It is a major level, but it's less of a major level than this green area here, and that is this area here. So we push below that, I'll be looking at my green area for possible long trades on lower time frames. Let's talk resistance levels. We have a situation where the euro dollar could keep going higher, right? We could push up and break into new highs. If we do, we want to be prepared for that. Another step in trading around major levels of structure is making sure you're prepared for whatever the market's going to throw at you. And markets could go up or down at any given moment. We don't control the market. We are participants. We participate in whatever it does. So us being prepared, just as a participant in a football game is prepared for what the other team is likely to do, us being prepared for what the market could do is a major step in becoming a consistently profitable trader and being successful in trading around major structure levels. So we zoom the chart out. We're going to look left here, and we have to go far back this time, right? We go far back as far as we have to, but because we have no price until back here in May of 2018, then we have to look there for our next level of major resistance. So again, if price pops up above my level here, pops up above and makes new highs, then what am I looking at in terms of the next level of possible resistance? And that, my friends, is something like right here. Why? Because it's the most recent level looking left. Even though it's really far away, it's still the most recent level, and it's been tested multiple times. With that being the case, the area between 1.2229 and 1.2155, if we get a break above, will be the next place on the euro dollar. I look for possible short trades with my swing trading style. So now that we know what I'm looking at on the euro dollar, let's take a look at the pound dollar, and let's do the same exact analysis. We'll actually go ahead and delete everything off the chart. Last week, everything we were talking about kind of played out. I said last week that I didn't think this level would hold again as resistance, and it didn't. We ended up breaking through. Now that we're back to that level, we're going to be talking about some possible long trades out of it. But let's go ahead and delete everything on the chart for now. Right now, looking at where price is, I want you to try to identify what would be the next level of major resistance this market is going to hit based on our bias of recency. Well, the most recent level of resistance is right here. And what I mean by recent is time-wise. How far back? Grab your ruler tool if you have to that counts candles. And you can go from the candle that's printing right now back to this candle that's 89 bars. If I keep going back to the next level of resistance, that's 139. So the most recent level of resistance that was tested and used as resistance is right here. So that's going to be a level I'm looking at for possible resistance because it was tested multiple times in the past as well. With that being the case, my next level of resistance, if the pound dollar continues higher, based on what you're learning in this video, is going to be an area between 1.3454 and 1.3368. This will be the next level of resistance. If this market continues higher, it will be an area I look on lower time frames for price action patterns that tell me the market's likely to reverse and push down from this level. In terms of support, where do you think I'm looking at for support? Well, right now, let's look at what the market's done. Identifying trend is a big part of identifying major structure as well, but it's not something I'm going to have time to get into in this video because this video would be an hour long if I tried to teach trend and structure in it. So let's talk about what the pound dollar has done so far. We had a low. The market then pushed up, created a new higher high based on our previous high, a new higher low based on our previous low, and a new higher high. What is this telling me? Well, it's telling me we have a possible reversal on our hands. The market was pushing down. Now we're possibly in a reversal to the upside and going to continue this uptrend. Us continuing this uptrend is very likely. With that being the case, I want to look at recency. What's the most recent level of resistance that was broken? Right here. And frequency. Was it a level tested multiple times? Yes. So my level is actually exactly where price is now, and it looks something like this. My level of support, that is. And I'll go ahead and draw in a green box to make this a lot more clear. The area of price that the market is in right now between 1.3 even and 1.3057 is where I'm looking at for possible long trades. And yes, by the end of today, I probably won't place a trade. It's Friday, but come Monday, this is the area I'll be looking for possible price action patterns or candlestick patterns or whatever my entry reason is. I'll be looking for that down on lower time frames. And let me do a brief example of what I'm looking for just to give you the full scope of everything you need to start trading, testing, and possibly adding major levels of structure into your trading plan. So let's drop down to a 1 hour chart. This is something like I would look for if come Monday when I'm planning to trade this. If this market comes down, creates a bottom, and then retests that bottom and gives me a green candle without breaking below this low over here, that shows me this is a double bottom. And if we get a green candle, that shows me buying pressure, which tells me we have a very high likelihood of this market heading higher, and I will be making a purchase on the pound dollar to buy if that happens. Hey guys, just wanted to give you some insight on that pound dollar trade we were just talking about. On Monday, we actually did get an entry reason. I'm finishing up the editing of this video here on Tuesday, and I want to show you guys what happened over the weekend and on Monday. Not really what happened over the weekend because the market's closed, but what happened on Monday. As you can see, last week we were in our zone. I'll drop down to that 1 hour chart. And here you can see this is about the place we were at last week when doing the video. If I push the market forward here, you can see that we came down, we got to push up. We're going to call that our first bottom, like we just talked about. And then we came down and we eventually got a green candle on a second bottom, showing me possible buying pressure that could push the market higher. With that being the case, I went ahead and made this buy trade. And if I hit play here, you can see that eventually this market pushed up and hit targets on this buy. But this is exactly what I'm talking about in terms of entry reason on these. I'm waiting for the market to get into these areas of major structure based on what you're learning in this video. Then I'm waiting on simple price action patterns like a double bottom with confirmation. Confirmation just being a green candle. And this is just a green doji, but any green candle is enough for me. I don't want to overcomplicate the rules of my trading. And with that being the case, we actually got a nice trade on this Monday that ended up hitting targets. Yes, it got close to our stop loss. We ended up getting filled, going through a little bit of pain, and then pushing up, but it was nowhere near close enough to stop us out, hitting about 7 pips here away from our stop loss. Again, eventually hitting targets. That was just a great teaching moment for me to show you exactly what I'm looking for in terms of entries, but now we'll jump back into the video. Now, this is just my style of trading. If it's not something you have ever tested, or if it's not something that aligns with your own philosophy of the markets, then don't go out there and start trading it. Don't go start trading it anyway. Make sure to test it first, as I always say. But now you know what I'm looking for in these zones. We have our support mapped out. We have our resistance mapped out because the pound dollar is already in that support level. My next support level, just so you know, is going to be right down here at our major support looking left. And that area is between 128 even and 1.2698. And now we're going to speed up a little bit. Hopefully now you get the concept. The rest of the video is going to be me showing you what I'm expecting on these pairs as we move into this week and next week. Here on the Aussie dollar, we have a level I pointed out between 0.700 and 0.7038. As you can see from this level, we actually had a really nice bounce out of price. The price came down to this level, hit it, and has pushed up dramatically since in a whopping 130 pip move. Now, the way I spotted this level is exactly how I've been teaching you. The market at the time was right 7 days ago, wherever the market was. And actually, this was 2 weeks ago. So 14 days ago, the market was probably right in here. So I was looking at the market from this standpoint and going, what's my next level of major support we will hit? Well, it's right here. If we continue pushing down, we will hit that level and push higher. And we may push higher. We'll hit that level and we're likely to see a small bounce out of it. At the time, I expected there to be a continuation pushing down, and still do, but I thought there would be a small bounce big enough to hit targets on a smaller time frame from this level. And that's exactly what the Aussie dollar did. But the reasoning behind that was because it was a very recent level that had been tested multiple times looking left. So that made it a major structure level for me as the market pushed down, eventually hit that level and popped out of it pretty nicely. Now, in terms of the next level of resistance, what do you think I'm looking at? Try to spot it. Well, let's start with the most recent level we have. This is the most recent level of resistance. And was it tested multiple times? The answer is yes, it was. Because of this test of resistance here, we have a major level of resistance. So if the market makes it up to an area that I have pointed out between 0.7237 and 0.7202, then that's an area I'll look for possible short trades out of. Obviously, you can see my red area a little bit higher as well. If we continue higher after that, I'll be looking at 0.7379 and 0.7320. And if we continue lower, you can see the area I have pointed out for major structure support. Looking left, and that area is between 0.6864 and 0.6803. For the same exact reasons, if we continue lower, what's the most recent level that we are going to hit? It's right here. And if we look left, that level was tested multiple times. Let's move on now to the dollar yen. The dollar yen, we had a level pointed out last week right here that the market has now found support from, which means that our analysis played out pretty nicely. Instead of playing you a clip, because I don't want this video to go super long, just trust me on this. We pointed this out last week. I'll put the video in the top right-hand corner so that you can go check it out. We said that this market, if we continue pushing lower, because at the time we were right up here, if we continue pushing lower, I thought this market would get some type of bounce out of this area. Overall, I thought the downtrend would continue. I was just looking for a bounce. And since entering this area, we've had a bounce of about 60 pips so far. Keep an eye on this later in the week. This area, dropping down to smaller time frames, is where I was looking for a possible double bottom. I never got that, unfortunately, so I wasn't able to enter a trade here as of yet. But if we continue pushing down and I do get a double bottom out of this area on the dollar yen, then it's an area I will be looking for possible short trades, long trades, excuse me. Now, if we push up, what is our most recent level of resistance? It is right here. And let's bring ourselves a horizontal line. Is that level tested multiple times? Yes, it is. We have support, support, resistance, and resistance. With that being the case, my next level of possible resistance, if the market on the dollar yen decides to push higher, is right here at my black lines, which are between 105.88 and 106.13. So if this market pushes higher from here, that's the level I'll look for possible short trades. If we continue lower, you can already see my support level at 102.49 and 101.98. That's a level I'll look for possible long trades out of, and that's because of a major level of structure looking left, the most recently tested major level of structure. I'll keep going back to that, that was tested frequently. And if this market continues lower, then time-wise, this is the most recent level we have. Next up, our final pair of the evening is going to be the dollar Swiss. On the dollar Swiss, similar to the dollar yen, I had this level pointed out as a major level of structure support. I do believe we'll get a little bounce out of it before the continuation of this overall downtrend here within the next week or so. It's just my opinion. I'm not psychic and I don't have a crystal ball. My name's not Merlin. I don't know what the market's going to do, but the likelihood, I trade based on statistics and logic, the likelihood is that we see a bounce out of this market before continuing lower, or even a possible reversal here out of this major level of structure on the dollar Swiss. So we were talking about last week, and now what we have to do, because we're in that zone, if we continue lower, what are we going to look at for possible support? Well, we have to zoom the chart out a pretty good ways back. Time-wise, what is the most recent level? Way down here. Well, because of that, here's a little nuance for you and a little bit of confusion. Hopefully it won't confuse you too bad. But when the market has this much space between two levels, I allow myself to continue back to the next level, which would be right here. Now put a horizontal line on that level. Was it tested multiple times? Yes, it was. We have resistance here, support here. For that reason, that is going to qualify as my next level of support here on the dollar Swiss. The really cool part is though, if we get down, start closing below these lows, we have a lot of room for trend continuation until we get to our next major level, which is going to be around 0.885. So that's what I'm looking at on the dollar Swiss for support. For resistance, hopefully this is obvious. Guys, what do you think I'm going to be doing if this market heads higher? What's our most recent level of major resistance? Right here. Was that level tested multiple times? Yes, it was. We have 1 and 2. So for that reason, I will have an area of resistance looking like 0.9251. The area between that and 0.9288 will be a level that if we get some nice bullish movement out of the dollar Swiss, I'll be looking for possible short trades in way of simple price action patterns on lower time frames like the 1 hour chart on the dollar Swiss. So there we go, guys. That's what I'm paying attention to, and that's how you spot major levels of structure correctly that you can trade around. If you enjoyed this content and you're ready for some more advanced training, we do have spots available right now in the EAP training program. And I just opened up a brand new section in the program called the Strategy Lab, where I'll be showing you tons of different strategies that I'm currently working on and optimizing and that have proven to be profitable on multiple pairs. So if you're interested in getting involved in that, checking out some of this new content in the EAP training program, and if you're interested in having me as your personal mentor, guiding you along your path to trading success, then I would love to have you aboard. And that link is in the description, or you can go to www.eaptrainingprogram.com. Other than that, and if that doesn't sound like something you're interested in, make sure you go ahead and click that subscribe button if you enjoyed today's content, the like button to help me out with the YouTube algorithm, and comment below because that also helps us get these videos to as many traders as possible. With that said, I hope you trade green and have a great weekend because it is Friday. I wish you nothing but the best, and I'll talk to you in the next video. See you soon.